Based on the provided data, the trend for Bitcoin appears to be bearish in the short term. The price has been declining steadily over the past 2 weeks, and the forecast suggests a continuation of this downtrend. The RSI is consistently below $50, indicating bearish momentum. The price is currently trading below the $20 day moving average, which further supports the bearish outlook. A suitable strategy would be to enter a short position at the market price of $88,500, with a stop-loss order placed at $89,500 to limit potential losses. The target price for this trade would be $84,300, based on the recent support level and the projected bearish trend. This strategy utilizes the identified downtrend, the RSI below $50, and the support level as key indicators. Remember that this is a high-risk strategy and should be approached with caution. Based on the provided data, Bitcoin Cash appears to be in a sideways trend with a slight downward bias. While the forecast price for the next week suggests a potential drop, the support price of $316 remains a key level to watch. A strategy could involve entering a short position when the price approaches the resistance level of $316. The stop loss could be set at $320 to limit potential losses, and the target price could be set at $300, aligning with the forecast low. However, it's important to consider the RSI and Bollinger Bands. The RSI is currently around $49.90, suggesting the price is not overbought. The Bollinger Bands indicate a tightening range, which could lead to a breakout in either direction. Therefore, a more cautious approach might be to wait for a confirmed break below the support level of $316 before entering a short position. The stop loss could be placed slightly above the breakout point, and the target price could be adjusted accordingly based on the momentum of the move. Based on the historical and forecast data, Stacks appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast predicts further price drops in the coming week. The support price of $0.783 indicates a potential floor for the price, but the resistance price of $0.874 suggests it will be difficult to break upwards. Considering these factors, a short position strategy is recommended. Enter a short position at $0.828, the closing price on March 02, 2025. Set a stop-loss order at $0.874, the resistance price, to limit potential losses. The target price for this trade is $0.765, the forecast price for March 03, 2025. This strategy aims to capitalize on the expected downtrend by selling high and buying low. Based on the provided data, Ethereum appears to be in a downtrend. The historical price data shows a consistent decline, with the price breaking below key support levels. The forecast data further reinforces this bearish outlook. Therefore, a short position is recommended. A suitable entry price would be around $2,320, the projected price for March 3. The stop loss should be set at $2,400 to limit potential losses. The target price could be $2,210, the historical support level, representing a potential 5% gain. However, given the strong downtrend, a more aggressive target of $2,100 could also be considered. This strategy combines the bearish trend analysis with the support and resistance levels to identify a potential entry and exit point. Based on the provided data, XRP appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, with a support level at $2.76 proving ineffective. The forecast predicts a continuation of this downtrend in the coming week, with prices expected to remain below $2.76. Therefore, a bearish strategy is recommended. A suitable entry point for a short position would be at $2.55, with a stop-loss order placed at $2.76 to limit potential losses. The target price for this trade could be set at $2.20, based on the projected downtrend and the historical lows observed recently. This strategy utilizes the RSI indicator, as the price is currently below $50, indicating bearish momentum. The Bollinger Bands also support this bearish outlook, with the price trading below the middle band and approaching the lower band. Based on the historical and forecast data provided, Binance Coin appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast suggests this trend will continue. The support and resistance levels also indicate a bearish sentiment, with the price struggling to break above the resistance at $623. Therefore, a bearish strategy is recommended. A short position can be entered at the market price around $610, with a stop-loss order placed at $623 to limit potential losses. The target price for this trade is $587, which represents a significant downside potential based on the recent price action and the forecast data. This strategy leverages the downtrend and aims to capitalize on the price decline. Based on the provided data, a potential investment strategy for Stellar could be as follows. A bullish trend is suggested by the historical price action, with the price finding support around $0.312 and showing upward momentum. The forecast data also indicates a potential for continued upward movement. We can enter a long position when the price breaks above the resistance level of $0.393. A stop-loss order should be placed at $0.312 to limit potential losses. The initial target price could be set at $0.417, which represents the recent high of the Bollinger Bands. Additionally, we can leverage the RSI indicator for confirmation. A buy signal could be generated when the RSI crosses above $50 and moves towards the overbought level of $80. This would indicate increasing buying pressure and potential for further price appreciation. However, it's important to note that this is just a potential strategy based on limited data and should be further refined and adjusted based on ongoing market conditions and risk tolerance. Based on the provided data, Toncoin appears to be in a downtrend. The historical prices show a consistent decline, and the forecast prices continue this downward trajectory. The support price of $3.32, while holding strong, indicates a potential bottom in the short term. The RSI values, while oscillating, remain below the overbought level of $80 and below the oversold level of $20, suggesting a lack of strong buying or selling pressure. A potential entry point for a short position could be around $3.40, with a stop-loss order placed at $3.45 to limit potential losses. The target price could be set at $3.15, based on the forecast data and the downtrend. This strategy leverages the downtrend and the potential for further price decline, while managing risk through a tight stop-loss order. Based on the provided data, Cardano shows a potential downward trend in the short term. Historical price action reveals a decline from February 17 to March 2, with a significant drop on March 2. The forecast data also indicates a continued downward trend through March 9. The RSI, while fluctuating, generally remains below $50, suggesting bearish sentiment. The Bollinger Bands show price action consistently below the middle band, further supporting a bearish outlook. Therefore, a short position could be considered with an entry price around $0.659, the low on March 2. A stop-loss order could be placed at $0.684, the high on March 2, to limit potential losses. The target price could be set at $0.620, which is a significant support level based on historical data. This strategy leverages the bearish trend identified through price action, RSI, and Bollinger Bands. Based on the provided data, Litecoin appears to be in a sideways trend with potential for upward movement. The historical price action shows a range between the support level of $114 and the resistance level of $135. The forecast data suggests a slight dip followed by a potential increase towards the end of the period. The RSI indicator is currently hovering around $54, indicating neither overbought nor oversold conditions. The Bollinger Bands are relatively tight, suggesting a potential breakout in either direction. A long position could be considered with an entry price around $122. A stop-loss order should be placed at $114 to limit potential losses. The target price could be set at $130, aiming for a profit of $8 per cent. This strategy utilizes the support level as a safety net and the potential upward movement suggested by the forecast data. Based on the provided historical and forecast data, the trend for Doge-Coin appears to be slightly bearish. The price has been consolidating around the support level of $2.79, with a slight downward movement in the recent past. The forecast data also suggests a potential decline in the coming week. Therefore, a conservative strategy could involve selling Doge-Coin at the current market price of $3.16 with a stop-loss order placed at $3.25 to limit potential losses. The target price for this trade could be set at $2.79, the identified support level. This strategy aims to capitalize on the potential downward movement while mitigating risk. Based on the provided data, Aptos appears to be in an upward trend. The historical price data shows a general increase over the 2 weeks, with the forecast data suggesting continued growth in the following week. The support price at $6.30 further reinforces this bullish sentiment. A potential entry point could be around $6.05, slightly below the current price, allowing for a buffer against potential short-term fluctuations. A stop-loss order should be placed at $5.90 to limit potential losses. The target price could be set at $6.65, aiming for a $10% gain based on the forecast data and the upward trend. The RSI indicator also supports this strategy. Currently hovering around $49, the RSI is not in overbought territory and suggests there is room for further upward movement. The Bollinger Bands further support this bullish outlook, with the price consistently trading above the middle band and showing a tendency to bounce off the lower band. The combination of these technical indicators, coupled with the overall upward trend, suggests a strong potential for profitable returns in the short term. Based on the provided data, SE appears to be in an upward trend. The historical price data shows a consistent rise, with the support price hovering around $0.221. The forecast data also indicates continued growth, with prices predicted to remain above the support level. The RSI oscillates between $33.50 and $54.10, suggesting a healthy market with potential for further gains. Considering these factors, a long position is recommended. A buy order should be placed at the entry price of $0.249, the opening price on March 3rd. The stop-loss order should be set at $0.221, the historical support level, to minimize potential losses. The target price is set at $0.289, the highest point reached in the Bollinger Bands during the historical period, representing a potential profit of approximately $16%. This strategy combines the upward trend, RSI indicators, and Bollinger Bands to create a balanced and potentially profitable investment opportunity. Based on the provided data, Ethereum Classic appears to be in a short-term downtrend. The historical price data shows a gradual decline over the past 2 weeks, and the forecast data suggests this trend may continue. The support price of $20.20 has been tested multiple times, indicating potential resistance in the upward direction. The RSI is currently hovering around $49.90, suggesting the asset is not significantly overbought or oversold. Given these factors, a potential strategy would be to enter a short position at the market price, with a stop-loss order placed at $20.80, slightly above the recent high, and a target price of $18.90, aligning with the forecast low. This strategy capitalizes on the perceived downtrend while managing risk by limiting potential losses. The stop-loss order will automatically close the position if the price moves against the trade, preventing further losses. The target price represents the expected profit level based on the forecast data. Based on the provided data, Polygon appears to be in a downtrend. The historical price data shows a consistent decline, with the price dropping below the support level of $0.271 in several instances. The forecast data also suggests a continued downward movement. Considering these factors, a short position strategy is recommended. Enter a short position at the opening price on March 3, $2025, which is $0.269. Set a stop-loss order at $0.277, slightly above the recent resistance level, to limit potential losses. The target price for this trade is 26 cents, based on the projected downward trend and the historical support level. The RSI indicator is currently below $30, suggesting an oversold condition, which could provide further downside potential. Additionally, the price is approaching the lower band of the Bollinger Bands, indicating a potential for further price compression and a subsequent break below the support level. Based on the provided data, AEVO appears to be in a downtrend. The historical price data shows a consistent decline, with the price falling below the support level of 15 cents on several occasions. The forecast data also suggests a continuation of this downtrend, with prices predicted to remain below the recent highs. Therefore, a short position strategy is recommended. Enter a short position at $0.158, the closing price on March 2. Set a stop-loss order at 17 cents, above the recent resistance level, to limit potential losses. Aim for a target price of $0.138, the predicted price for March 3. This strategy utilizes the downtrend and forecast data to anticipate a further decline in price. Based on the provided data, optimism appears to be in a range-bound trend with a slight downward bias. The historical price data shows fluctuations between the support level of $1.04 and the resistance level of $1.16. The forecast data suggests that this trend might continue, with prices potentially dipping below the support level in the coming week. Therefore, a cautious strategy would be to wait for a price dip towards the support level, $1.04, before entering a long position. The stop-loss order should be placed below the support level at $1.03 to limit potential losses. The target price could be set at the resistance level, $1.16, for a potential profit of $12%. This strategy combines the support resistance levels with the price forecast, aiming to capitalize on a potential bounce from the support level. Based on the provided data, STRK appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price falling below key support levels. The forecast data for the next week suggests this downtrend may continue. Therefore, a bearish strategy is recommended. Enter a short position at the market price on March 3, $2025, when the price is forecasted to be $0.198. Set a stop-loss order at $0.215 to limit potential losses. Target a profit at $0.185, based on the historical support level and the downtrend projection. This strategy utilizes the forecast price as the entry point and incorporates risk management with a stop-loss order. Based on the provided data, Solana appears to be in a downtrend. The historical price data shows a consistent decline, with the price breaking below the support level of $135. The forecast data also indicates a continued downward movement in the coming week. Considering these factors, a bearish strategy is recommended. Enter a short position at the current market price, which is $169. Set a stop-loss order at $176 to limit potential losses if the price unexpectedly reverses. Aim for a target price of $135, which is the identified support level. This strategy leverages the downtrend and aims to profit from the predicted decline in price. Based on the provided data, Jupiter appears to be in a sideways trend with a slight downward bias. The historical price data shows fluctuations around the support level of $0.795, with occasional dips below and rallies above the resistance level of $0.952. The RSI indicator oscillates between $37 and $52, suggesting a lack of strong momentum in either direction. Considering these factors, a potential strategy could involve a long position with an entry price around 79 cents, a stop-loss price at 78 cents, and a target price of 85 cents. This strategy leverages the support level as a potential buying opportunity, aiming to capitalize on a potential upward move. However, the stop-loss is placed slightly below the support to mitigate risk in case the price continues to decline. It's important to note that this is just one possible strategy and should be adjusted based on individual risk tolerance and market conditions. Based on the provided historical and forecast data, Render appears to be in a downtrend. The price has been consistently decreasing over the past 2 weeks, with the forecast indicating further decline in the coming week. Therefore, a bearish strategy is recommended. A good entry point for a short position would be around $3.77, the predicted price on March 03 RD. The stop-loss should be set at $3.89, the predicted high for the week, to limit potential losses. The target price could be set at $3.51, the predicted low for the week, aiming for a potential profit of around $7%. This strategy utilizes both the predicted price movement and the support and resistance levels to define the entry, stop-loss, and target prices. Based on the provided data, Solana name service appears to be in a downtrend. The historical prices show a consistent decline, with the price hovering around the support level of $0.139. The forecast prices also indicate a bearish outlook for the upcoming week. Considering these factors, a short position strategy is recommended. The entry price should be around 12 cents, with a stop-loss order placed at $0.139, the support level. The target price can be set at $0.107, the recent low point. This strategy utilizes the support level as a risk management tool and aims to capitalize on the potential continuation of the downtrend. Based on the provided data, Doge-Coin appears to be in a downtrend. The historical price data shows a consistent decline, with the price falling below the support level of $0.201 on multiple occasions. The forecast data also suggests a continued downward movement. The RSI indicator, hovering around the oversold level, further supports this bearish outlook. Therefore, a short position strategy is recommended. Enter a short position at the current market price of $0.207, with a stop-loss order placed at $0.211, above the recent high and the support level. The target price is set at $0.191, based on the recent low and the downward trend projection. This strategy aims to capitalize on the potential further decline in Dogecoin price. Based on the provided data, PEPE appears to be in a downtrend. The historical price data shows a consistent decline over the 2 weeks, with the forecast data suggesting this trend will continue. The support and resistance levels further indicate a bearish bias, with the price consistently trading below the resistance level. Therefore, a short position is recommended. Enter a short position at the market price, with a stop-loss order placed at $0.0000780, slightly above the recent support level, and a target price of $0.0000730, the lowest predicted price in the forecast data. This strategy aims to capitalize on the ongoing downtrend and potential further price decline. Based on the provided data, Shiba Inu appears to be in a downtrend. The historical price data shows a consistent decline, with the price hovering around the support level of $0.0000136. The forecast data further reinforces this bearish outlook, predicting a continued decline in price over the next week. Considering these factors, a short position strategy is recommended. Enter a short position at the market price, with a stop-loss order set at $0.0000141, the recent high within the Bollinger Band, and a target price of $0.0000132. This target price is based on a combination of the historical support level and the predicted price decline. The RSI indicator is currently below $40, suggesting that the market is oversold and ripe for a potential bounce, but the overall trend remains bearish. Monitoring the RSI and Bollinger Bands will be crucial for managing the position and potentially adjusting the stop-loss or target price. Based on the provided data, Dog with Hat appears to be in a downtrend. The historical price data shows a consistent decline, with the recent forecast data suggesting further downward movement. The RSI indicates that the asset is oversold, potentially signaling a short-term bounce. However, the Bollinger Band suggests a continuation of the downtrend, with the price likely to remain below the middle band. Therefore, a bearish strategy is recommended. Enter a short position at the market price, with a stop-loss order placed above the recent high of $0.759. Target the first support level at $0.629, and then consider a further target at the bottom of the Bollinger Band, around $0.525. Remember to manage your risk and adjust your stop-loss accordingly as the market moves. Based on the provided data, Doge-Coin appears to be in a sideways trend with potential for a bullish breakout. The price has been oscillating between the support level of $0.00257 and the resistance level of $0.00658. The RSI indicator is currently hovering around $50, suggesting neither overbought nor oversold conditions. A potential buy strategy could be initiated if the price breaks above the resistance level of $0.00658. The entry price would be $0.00659, with a stop-loss order placed at $0.00257 to limit potential losses. The target price could be set at $0.00858, representing a $30% profit margin. This strategy is based on the bullish breakout scenario and the potential for continued upward momentum. Based on the provided data, Near Protocol appears to be in a slight downtrend. The historical price data shows a general downward movement, with the price hovering around the support level of $3.14. The forecast data also suggests a continuation of this downtrend, with prices predicted to remain below the previous week's high. Therefore, a short position strategy is recommended. Enter a short position at the market price when the price touches the resistance level of $3.48. Set a stop-loss order at $3.58 to limit potential losses. The target price for this trade is $3, aiming to capture the anticipated downtrend. This strategy incorporates the identified trend, support and resistance levels, and sets clear risk management parameters. Based on the provided data, Internet Computer appears to be in a short-term downtrend. The historical price data shows a consistent decline from February 17 to March 2, with the price hovering around the support level of $6.76. The forecast data suggests this downtrend may continue, with prices predicted to fall further in the following week. Considering these factors, a bearish position strategy is recommended. A potential entry point could be at $6.67, the closing price on March 2. The stop-loss order should be placed at $6.76, above the immediate support level, to limit potential losses. The target price could be set at $6.43, the forecast price for March 3, representing a potential profit of approximately 3.5%. This strategy leverages the potential continuation of the downtrend and utilizes both technical indicators and price action to define entry, stop-loss, and target levels. Based on the provided data, Injective appears to be in a downtrend. The historical price data shows a general decline, and the forecast data suggests continued downward pressure. The RSI, hovering around $40, indicates the asset is not oversold, but not strongly bullish either. The Bollinger Bands show price action consistently below the mid-band, further supporting the downtrend narrative. A potential strategy could involve shorting Injective when the price approaches the resistance level of $16.40. The stop-loss order should be placed above the recent high at $16.40, limiting potential losses. The target price could be set at the support level of $13, which has held previously. This strategy capitalizes on the downtrend and aims to profit from the expected price decline. Based on the provided data, BTC appears to have experienced a period of upward trend followed by a slight retracement. The forecast data suggests a continuation of this downward trend in the coming week. Considering the support price at $321 and the RSI levels, a potential entry point could be around $335, with a stop-loss order placed at $321 to minimize risk. The target price could be set at $345, aiming for a 3% gain. In addition to the above strategy, we can also utilize the RSI and Bollinger Bands indicators. An RSI reading below $20 would signal an oversold condition, potentially indicating a buying opportunity. Conversely, an RSI above $80 would suggest an overbought condition, potentially signaling a selling opportunity. Bollinger Bands can be used to identify potential breakouts or reversals. A price break above the upper band could indicate a bullish move, while a break below the lower band could signal a bearish move. By combining these indicators with the price action and trend analysis, we can refine our trading strategy and improve our chances of success. Based on the historical and forecast data, THETA network appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, with the forecast indicating further downward movement in the coming week. Support and resistance levels suggest a potential for a short-term bounce, but the overall trend remains bearish. A good entry point for a short position would be around $1.18, near the recent highs and the upper Bollinger Band. A stop-loss order should be placed at $1.26, slightly above the immediate support level, to limit potential losses. The initial target price could be set at $1.11, the lowest point in the forecast data. The RSI indicator is currently hovering around $34, suggesting that the asset is not oversold. However, if the price continues to decline and the RSI falls below $20, it could signal an opportunity for a short-term bounce. The Bollinger Bands are also indicating a potential for a short-term bounce, as the price is currently trading near the lower Bollinger Band. Overall, the combination of the bearish trend, the RSI, and the Bollinger Band suggests a favorable risk-reward profile for a short position. Based on the provided data, WorldCoin appears to be in a downtrend. The historical price data shows a consistent decline, with the price falling below the support level of $1.09 on several occasions. The forecast data also suggests a continued downward movement. Given these observations, a bearish strategy is recommended. Enter a short position at the market price around $1.10. Set a stop-loss order at $1.15 to limit potential losses. The target price for this trade is $1.05, based on the support level and the forecast data. This strategy leverages the potential for further price decline and aims to capture a profit of 5 cents dollars. Based on the provided data, Hooked Protocol appears to be in a sideways trend with a slight upward bias. The historical price data shows fluctuations within a defined range, and the forecast data suggests continued consolidation. The RSI oscillates between oversold and overbought levels, indicating indecision in the market. Therefore, a conservative strategy would be to wait for a clear break above the resistance level of $0.245. A buy signal could be generated when the price closes above this level, with an entry price set at the next higher candlestick close. The stop-loss order should be placed below the recent swing low, around $0.198, to limit potential losses. The initial target price could be set at the next resistance level, which could be around 27 cents. This strategy aims to capitalize on a potential upward breakout while managing risk effectively. Based on the provided data, Artificial Superintelligence Alliance appears to be in a downtrend. The historical price data shows a consistent decline, with support holding around 73 cents. The forecast data suggests this downtrend will continue, with prices predicted to fall below the current support level. Considering the RSI, which is currently below $40, indicating oversold conditions, a potential short entry could be considered. A short position could be initiated around $0.654, with a stop-loss set at $0.664 to limit potential losses. The target price could be set at $0.629, aligning with the forecast data and allowing for a reasonable profit margin. Utilizing the Bollinger Bands, we observe that the price has been trading below the middle band for several days, suggesting a weakening trend. The price is also approaching the lower band, indicating a potential bounce or further decline. While this strategy alone is not conclusive, it reinforces the bearish outlook and supports the short position strategy outlined above. The combined analysis of historical data, forecast data, RSI, and Bollinger Bands suggests a strong probability of a continued downtrend in Artificial Superintelligence Alliance, making a short position with the specified entry, stop loss, and target price as a potentially profitable opportunity. Based on the provided data, Polkadot appears to be in a slight downtrend. The historical price data shows a gradual decline, with the forecast data suggesting a continuation of this trend. The RSI oscillates around the neutral level of $50, indicating a lack of strong momentum in either direction. However, the price consistently finds support around the $4.64 level, suggesting potential for a rebound. Therefore, a buy strategy could be implemented with an entry price around the support level of $4.64. A stop-loss order should be placed below the recent low of $4.43 to limit potential losses. The target price could be set at the resistance level of $6.30, aiming for a potential upside of $36%. This strategy utilizes both the support and resistance levels, as well as a potential rebound from oversold conditions. Based on the provided historical and forecast data, Filecoin appears to be in a sideways trend with a slight bearish bias. The support level at $3.14 is strong, and the resistance level at $4.97 seems unlikely to be broken in the short term. The RSI indicator suggests that the asset is not overbought or oversold, hovering around the neutral zone. Therefore, a potential strategy could involve a long position with an entry price around $3.18, a stop-loss price at $3.14, and a target price at $3.35. This strategy aims to capitalize on potential upward momentum while minimizing risk by placing a stop-loss order below the support level. The target price is chosen based on the historical price action and the forecast data, aiming for a modest profit. Based on the provided data, Conflux shows a slight upward trend over the past 2 weeks. The forecast data suggests a potential continuation of this trend, but with a slight decline in the coming week. The RSI indicates that the asset is not currently overbought or oversold, suggesting a balanced market sentiment. The Bollinger Bands are relatively tight, indicating low volatility. Considering these factors, a long position could be considered. A buy order could be placed at the entry price of $0.112, with a stop-loss order set at $0.109 to limit potential losses. The target price could be set at $0.125, aiming for a $10% profit. This strategy utilizes the support level as an entry point, aiming to capitalize on the potential upward trend. Based on the provided data, Ethereum name service appears to be in a downtrend. The historical price data shows a consistent decline, with the price falling below the support level of $21.40 on several occasions. The forecast data also suggests further price decline in the coming week. Considering this downward trend, a short position strategy is recommended. A suitable entry price would be around $22.50, the predicted price for March 3rd. The stop-loss order should be placed above the recent high of $24.10 at $24.50 to minimize potential losses. The target price could be set at $21.40, the established support level, aiming for a potential profit of around 5%. This strategy utilizes the downtrend and support level as key factors for entry and target price determination. Based on the provided data, Avalanche appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data projecting further downward movement. The RSI indicator, hovering around $35, suggests the asset is not oversold, but the Bollinger Bands indicate a potential for further price decline as the price is approaching the lower band. Therefore, a bearish strategy is recommended. Enter a short position at the market price when the price reaches $22.50, with a stop-loss order placed at $23.50 to limit potential losses. The target price is set at $21, aiming to capture the projected downward movement. This strategy combines the bearish trend, RSI levels, and Bollinger Band signals to maximize potential profits while mitigating risk. Based on the provided data, Bitcoin appears to be in a downtrend. The historical price data shows a consistent decline, with the price hovering around the support level of $0.0316. The forecast data also suggests a further decline in the coming week. Considering this trend, a short position strategy could be implemented. A suitable entry point would be around $0.0318, close to the support level. The stop-loss order should be placed above the recent high of $0.0328 to minimize potential losses. The target price could be set at $0.0274, the lowest forecast price for the week. This strategy utilizes the downtrend and forecast data to identify a potential selling opportunity. Based on the provided data, PENDLE appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, with the forecast data suggesting further downward movement. The RSI indicator is currently below $50, indicating bearish sentiment. The Bollinger Bands are also narrowing, suggesting a potential for a breakout in either direction. Given this analysis, a bearish strategy is recommended. Enter a short position at the market price, with a stop-loss order placed above the recent resistance level of $3.55. The target price should be set at the next support level, which is around $2.75. This strategy aims to capitalize on the downtrend while managing risk with a tight stop-loss. Based on the provided data, the sandbox appears to be in a downtrend. The historical price data shows a consistent decline, with the price consistently trading below the resistance level of 36 cents. The forecast data also suggests a continued downward movement in the coming week. Considering these factors, a short position strategy could be considered. A suitable entry point for a short position would be around $0.315, the high point of the predicted price range for March 3rd to March 9th. The stop-loss order should be placed above the recent high of $0.358 to minimize potential losses. The target price for this trade could be set at $0.288, the low point of the predicted price range for March 3rd to March 9th. This strategy leverages the downtrend momentum and aims to capture potential price decline. Based on the provided data, Decentraland appears to be in a downtrend. The historical price data shows a consistent decline, supported by the falling trend of the Bollinger Band center line. The forecast data further reinforces this downward trajectory. The RSI, while fluctuating, generally remains below $50, indicating bearish sentiment. Considering these factors, a short position strategy is recommended. Enter a short position at the market price, which is currently around $0.315. Set a stop-loss order at $0.318 to limit potential losses. The target price for this trade is $0.283, based on the lowest forecast price. Monitoring the RSI and Bollinger Bands closely will be crucial for managing this position. If the RSI drops below $30, indicating overselling, consider taking profits partially. Conversely, if the price rebounds and the RSI moves above $50, consider closing the position to avoid potential reversals. Based on the provided data, ENG coin shows a slightly bearish trend with fluctuating prices. The historical data suggests support around 11 cents, while the resistance is at $0.128. The forecast data indicates a potential decline in price over the next week, with the lowest predicted price being $0.107. Considering these factors, a cautious short position strategy could be implemented. Enter a short position at $0.114, the current market price. Set a stop-loss order at $0.118 to limit potential losses. The target price for this trade would be $0.107 based on the lowest forecast price. This strategy leverages the potential price decline while managing risk with a tight stop-loss. Based on the provided data, Uniswap appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend will continue. The RSI is consistently below $50, indicating bearish sentiment. The Bollinger Bands are also contracting, suggesting a potential for a further price decline. Therefore, a strategy would be to enter a short position when the price reaches the resistance level of $8.34. The stop-loss order should be placed at $8.60, aiming to limit potential losses. The target price for this trade could be $7.13, based on the forecast data, which represents a significant potential profit. Remember that this is just a suggested strategy and should be carefully evaluated before implementation. Based on the provided historical and forecast data for Chainlink, a potential investment strategy can be formulated. The trend over the past 2 weeks shows a downward movement, with the price consistently trading below the resistance level of $18.30. The forecast suggests this downward trend might continue in the coming week. Considering the RSI, which is currently around $46.80, it is neither overbought nor oversold, indicating a neutral sentiment. However, the price is approaching the support level of $14.80, which could act as a potential buying opportunity. A possible entry point could be around $14.80, with a stop-loss order placed at $14.50 to limit potential losses. The target price could be set at $17.50, aiming for a potential upside of around $20. This strategy utilizes the support level as a potential entry point and the resistance level as a profit target. It's important to note that this is just a suggestion based on limited data, and market conditions can change rapidly. Based on the provided data, Aave appears to be in a downtrend. The historical price data shows a consistent decline, with the price breaking below the support level of $211 in the last week. The forecast data also suggests a continued downward trend. The RSI indicator is consistently below $50, indicating bearish sentiment, and the price is currently trading below the Bollinger Band middle line, suggesting further potential downside. Therefore, a short position is recommended. Enter a short position at the market price, around $203, with a stop-loss order placed at $211 to limit potential losses. The target price for this trade is $197, which is the next support level, based on the forecast data. This strategy capitalizes on the perceived downtrend and aims to profit from the expected price decline. Remember that this is just a suggestion and should be thoroughly researched and analyzed before making any investment decisions. Based on the provided data, EOS appears to be in a short-term downtrend. The historical price data shows a consistent decline, supported by the RSI indicator, which remains below $50. The forecast data suggests this downtrend may continue. The Bollinger Bands are also converging, indicating a potential for increased volatility. Considering these factors, a short position could be considered. A suitable entry price for a short position would be around $0.575, which is slightly above the recent low and within the current Bollinger Band. A stop-loss order should be placed at $0.595, above the recent high, to limit potential losses. The target price could be set at 54 cents, based on the support level observed in the historical data. This strategy combines the downtrend analysis with the RSI and Bollinger Bands to identify a potential entry and exit point. Based on the provided data, Tron appears to be in a sideways trend with a slight upward bias. The historical price data shows a range between $0.226 and $0.246, with a recent support level at $0.238. The forecast data suggests a potential continuation of this upward trend, with prices predicted to reach $0.252. Therefore, a buy strategy could be implemented with an entry price around $0.238, the current support level. A stop-loss order should be placed at $0.236, slightly below the recent support, to limit potential losses. The target price could be set at $0.252, based on the forecast data. This strategy capitalizes on the potential upward momentum while managing risk effectively. Based on the provided data, Suncoin appears to be in a downtrend. The historical price data shows a consistent decline, with the price hovering around the support level of $0.0172. The forecast data also suggests a continuation of this downtrend. Therefore, a short position strategy is recommended. Enter a short position at $0.0175 with a stop-loss order at $0.0182, the resistance level, and a target price of $0.0169, the bottom of the Bollinger Bands. The RSI indicator is currently below $40, indicating oversold conditions. This further supports the short position strategy. The Bollinger Bands are also narrowing, suggesting a potential breakout in either direction. However, given the overall downtrend, a short position is more likely to be profitable.